Welcome, everyone. I'm very pleased to be here with Cathy, who is the person that American Banker has called the most powerful woman in banking. Before we begin, though, I'm curious because a recent TV program kind of reminded me of some of the issues that we're going to talk about with Cathy. How many of you, show of hands out there, watch Billions? Anybody? A few of you watch Billions. So in the third episode of this current season, Taylor, the CIO at Axe Capital, wanted to bring in the quants. And there was a lot of fear on the part of the traders. And they basically talked about the robots have come. The end is, this is how it ends. Eventually, the only guy left is the one feeding the machines, is what Mafi says. And then, of course, Dollar Bill tells them all to buck up and be strong and forget about it. But this obviously captures something that is in the zeitgeist right now, right? In pop culture, that there's this fear of the machines, of the robots coming to take your jobs. And this is something that I think Cathy thinks a lot about. So Cathy, I want to ask you, there is this fear out there right now. We've seen this actually happen in some other industries, right, where you have automation taking jobs. The auto industry is one that really strikes me. So is this coming to banking? Is this legitimate fear that people have?
Well, a couple of thoughts. One is it absolutely is coming to banking. In fact, artificial intelligence has been part of banking for decades, literally. If you stop to think about it, a credit score, which we've been using for years and years, is nothing more than data and algorithms applied to it to produce some sort of judgment about creditworthiness. So been around for a long time. And I think a lot of the fear that we've created in our workforce has been exactly that, fear we have created. Because we do try to tell a very powerful message to certain stakeholders, to shareholders, to investors, about the power, the potential power of AI and the efficiencies that it can help create, which is a great set of messages to one set of stakeholders, but a little bit terrifying to people who say, wait a minute, it's my job that's going away.
So tell me what this looks like at Bank of America. If I'm one of the clients sitting in the audience today, perhaps, or if I'm an institutional client, for example, how does the technological interface or the AI interface with Bank of America look like right now?
Well, a couple of things. One is I always try to separate the conversation between AI and robotics. Robotics is the application of technology to routine tasks. And so if you're a technologically based or even a manual processing based workforce, robotics is really your big fear around deployment because it does in fact change the tasks that you perform every day. AI, from my perspective, is about producing insights, taking data and taking incredible amounts of compute power that 5 years ago we didn't even know or believe, maybe we believed, but we did not have at our fingertips or at scale or in some democratized fashion, and applying that compute power to produce those insights. And so every day we're working to say, what data do we have? How is it architected for speed and ease of use? How is it protected, of course? But also, what are the market-leading algorithms and the market-leading analytical tools that we need to apply to that data to create competitively advantageous insights? And so it's everything from how we deploy it at the bank is everything from macro, in a macro sense, risk management, financial management and planning, those kinds of things, but also in a very micro sense. What's the predictability of a certain outcome in an industry or across a set of clients, even down to the segment of one client?
So it sounds like you're talking about the difference between something that can be used as a tool and something that can be used as a replacement for at least some of your tasks, in the case of robotics.
That's the way I think about it.
So in the case of tools, what are the set of questions you have to ask yourself in your role or anyone using this kind of technology when you want to figure out if it's ethical? What does it mean if you're applying this set of rules to AI to make it ethical?
So I think it starts with, and this is actually much harder than it seems, it starts with defining what's the information or what's the question that you're trying to answer. And in order for AI to be successful, those definitions have to be precise, and they have to be agreed to by the creator of the algorithm and by the user of the algorithm. I think ethics come into it at every step in the process. And so ensuring that the outcome of the modeling or the outcome of the analytics is the outcome that was intended and not an outcome that may have been based on a particular bias by the designer of the model or use of data that was sourced appropriately or inappropriately. You know, there's every element of potential bias along the way, and all of those can have a negative impact on the efficacy of the output.
So how do you avoid that? Is it just a matter of examining what the potential bias can be going into it, sort of with your eyes open, as a way of trying to avoid it?
It's testing, testing, testing. And in some cases, that testing is easier than in others. When we create our own models and algorithms, that is relatively easy to test. We know the source of the data, and we can monitor every aspect of the variables that are used in models and run all kinds of tests on output to make sure the output was as intended. Not so easy when we buy modeling from third parties. And with as hot as AI is right now as a topic of conversation, there are immense numbers of firms that, large and small, that attempt to sell or peddle or sell us their various forms of algorithms and technology to apply to our data. And that's a much more difficult process.
And actually, we have a chart looking at the number of mentions of these things in conference calls. It's really spiked over the past couple of years. Speaking of testing, I want to do a little poll of the audience regarding what we're talking about. And the question we're asking is, how much do you trust your financial institutions to use artificial intelligence technology responsibly and ethically? So you guys have your clickers. I feel very Jeopardy saying that. Pick up your clickers. So either A, I have complete trust, B, I have some trust, C, I have little trust, or D, I have no trust. So some of the issues that Cathy's talking about that the bank is striving towards, I'm curious how people feel about these questions, whether her bank, whether the financial industry as a whole is succeeding on these fronts right now. Okay, so some trust or little trust is getting the most votes here. What do you think the issues are? I mean, you're talking about algorithms. Those things don't always interface with the public. There are other things that the bank does that interface with the public. You all have a virtual assistant, for example, like a Siri for banking, whose name is Erica, I believe. What do you do to ensure that people have trust in Erica? That Erica's not going to listen if someone's named Erica in the room, that Erica's going to listen and send their conversation somewhere, for example?
Well, a lot of the protections in a digital assistant happen at design, at the point of design. So in order to use Erica, you have to take a physical action to engage Erica, a little bit like Siri, right? So there is no potential for overhearing because the applications that support Erica can't be engaged unless there's a physical action, an authenticated action. I do sound like a tech geek today. I'm a little worried about that. And unless there's an authenticated action to initiate the device. So I think a lot of it has to do with what is the mentality of the user of the AI. So, and our mentality is protection and confidentiality from the start. Same is true of governance. We're not about the wild, wild west of model application. We go through a very robust process to examine, govern, put transparency into our modeling to make sure that people who understand the outcomes are actually making judgments along the way about what should or shouldn't be done, especially when you're talking about the scale of an organization like ours. If you're a little bit off, at the point of inception, you'll be a lot off once the judgments that are being created by those algorithms are deployed into a marketplace. So the stakes, I think, around customer protection and around model judgment are very high.
Let's come back to the workforce question also. So we talked about the tools side of the equation. What about the robotics side of the equation, where you're talking about potential replacement? If Erica, for example, is replacing a call center employee, is that what that action replaces? And what do you do with that person?
Well, a couple of things. First, what we tend to find is that robotics replaces tasks, not the need to manage the task. And so as long as we are smart and aggressive and thoughtful about workforce transformation and are ahead of the changes in our workforce, it's our belief that there's not some concept of job decimation that has to happen as a result of robotics. In fact, I equate it, when I joined Bank of America in 1982, I was a corporate banker. I used to have to spread financial statements by hand, literally with a number 2 pencil, right? Today that's all done on an automated basis. And the theory of the case is that if the bankers aren't spending time physically spreading a financial statement, they're spending time applying their intellectual capital to the customer or client at hand and taking the information and turning it into something of value as opposed to routinized calculation. So the whole idea is to mechanize those routine things to free up capacity to do the thought and human interaction work.
What about a lower skilled worker, though?
No question that there's a lot of implications from robotics, but this again has been something that's happened in banking for decades. We haven't looked at checks or counted money by hand again in years and years, and yet overall employment levels haven't really changed as a result of that of the application of robotics. We do, though, have to be smart about it, and we believe at Bank of America that it's our issue to help be the solution to workforce transformation. It's not the role we see ourselves playing to leave that to somebody else. I think that there are a lot of lessons in history. You bring up the automobile industry, and no question we should pay a lot of attention to the lessons in history about what happens when everyone believes the challenge of workforce transformation belongs to someone else.
And so are there examples that you can give me from Bank of America, you know, reskilling programs, retraining programs that you've had to do given some of the transformations from technology?
Absolutely. We've been running technology development programs and operations development programs much more aggressively in the last 5 years than we ever have. We've created a concept, an umbrella concept for our training effort that we call GT&O, Global Technology and Operations University, so that we have huge amounts, I think 6,000 different types of curricula that we can help people have access to, but that they can access themselves, so that they can build and we can build for and with them career pathing that makes sense for the environment we're in, not the more manual environment where they have come up. But it is literally person by person. And what is the skill set and what's the role and what is the skill set of the future versus the skill set of the past. But it's not esoteric. I don't want to sound esoteric or theoretical about it. We've, let's see, 50% increase year over year in our training and development budget. I expect that budget to increase by another 50% next year, because these investments in our human resources, our human employees, are what's going to make the difference between workforce transformation and a less attractive alternative.
Now, we also saw that chart before from the conference call showing the real spike in mentions of this. I know this is something you've been thinking about for a few years. Did you have a moment where it sort of crystallized for you, where cold sweat, middle of the night moment, where you thought, you know, this is really changing what we're doing and we need to address it. We need to ask these questions. We need to approach it in a systemic way. Was there some sort of triggering incident for you?
I did, actually. I run a call every month for my 9,000 managers. So in my organization, 90,000 people in total, 9,000 managers. And we run a call where they can ask me any question that they want to. Sometimes helpful and constructive and positive, and sometimes more challenging to answer. But it's really a no-holes-barred kind of a thing. And I began, honestly, I can almost go back to the exact call where I thought that our answers on workforce transformation started to sound hollow, where we had people who were in fear and our answers were not keeping up with their belief about the pace of change. So we literally sat down and said, okay, can we be trusted by these 90,000 people to steward their careers appropriately in light of technology that is changing more rapidly than technology change of old? And how do we stay ahead, kind of what we were talking about earlier, how do we stay ahead versus where might we fall behind? And it was an intellectually honest set of moments to say, wait a minute, we're talking about it, but if we're impacting real lives, is what we're doing sufficient to say we own workforce transformation? And so we set about it much more aggressively and very differently, probably over the last 18 months or 2 years. But I can remember sitting there thinking, my answer isn't keeping up with the fear of my people.
And you, as you mentioned, your background originally was in corporate banking at Bank of America. So you're not a tech geek, as you put it, even though you might be adopting some of that tech speak. How has that been a disadvantage and an advantage as you've been attacking these problems?
Well, I've been lucky enough to come up in almost every one of our businesses at the bank. So I've run consumer businesses, wholesale businesses, payments businesses. I don't know how you're a technologist today without a deep understanding of the business. So in that sense, it's been a real advantage. We've had a philosophy for the last 7 or 8 years as I've been in the role. We've had a philosophy that says beautiful technology without a commercial use, or beautiful technology, Picasso-like technology that does not impact a customer or a line of business, full of sound and fury signifying nothing. Has really been our approach. And I think that only comes with a deep understanding of the business. So in that sense, it's been a real plus. Obviously, I had a lot of learning to do. And to proceed with that learning aggressively and in a way where we could still manage an immense amount of resources and people, but at the same time do the right amount of learning at my level to be credible in the space. That's something that anybody, I think, who has to take on a new role in a company finds their ways of and their methods for doing.
I want to get to one more topic. First, just a quick follow-up on that. So as you've approached technology and you say you're looking for really useful technology, not just technology for the sake of technology, does that also put you at something of a disadvantage? Or do you, in other words, because you're not sort of chasing every avenue in the hopes that eventually it'll come to something, do you miss out on things, do you think?
There are times we're not first to market, and there are times that we're deliberately not first to market. We were probably 6 months behind the market in mobile check deposit, so using your phone to take a picture of your check. And we were pleased actually to be a fast follower. In the beginning of the use of that technology, error rates as much as 30%. So and when you're at Bank of America and you're innovating across 30 million households, an error rate of 30% is a cost structure and a poor experience in and of itself that is not consistent at all with the way we want to go to market. So in that case, probably 6 months behind the market, error rates had come down into single digits. Nobody remembers that we were behind the market now, but we had a much better customer experience as a result. We're active in the innovation space. We dedicate a lot of time and resources to it. We're a financial institution with in the top 100 U.S. Patent Office lists of patent issuers every year. So we're very serious about the creation and protection of intellectual property because it's an important part of our basis of competition.
Finally, I want to move beyond Bank of America because I know something that you were excited about is that you were instrumental in spurring Harvard to set up this Council on the Responsible Use of Artificial Intelligence, what we've been talking about, ethical AI. Bank of America is a founding donor to this. And essentially, I'm going to paraphrase here, the Council's mission is to make sure we're using the AI is not using us, in a sense.
Very well said. That's precisely what it's designed to do.
So what are your hopes for the Council? What is it going to achieve I assume, for the greater corporate world?
I think several things are important. First, it's designed to ensure that we capture the growth potential that artificial intelligence can and will and is driving, but that we minimize or that we're making deliberate decisions in the places where the deployment of AI could create risk. The risk of human bias in model design, the risk of really the unintended consequence, the risk of our legal and judicial structures, because there's no real charted path for a lot of this. When your autonomously driving vehicle doesn't perform the way it's supposed to or people want for it to perform, who's at fault? The software engineer who designed the software, the driver whose hands weren't on the steering wheel. There is not a legal construct for any of this. So the purpose of the council is to ensure a multidisciplinary debate and discussion, to ensure that we're asking the right questions, because I'm not sure we know all the questions to ask, and to make sure that, again, we're ahead of the deployment, not that the deployment is ahead of the structures and the infrastructure that have to support it. So multidisciplinary is important, rebalancing the discussion from the creators to the users to ensure that the outcomes is important, and being agnostic. So the decision to support the work of Harvard was because we want an agnostic discussion, not a discussion that's influenced by or solely influenced by those that have a stake in the outcome, because really we all do.
Okay, Cathy, we have to leave it there. Thank you so much. Cathy
Thanks,
Bessant,
Julie.
Bank of America Chief Technology Officer and Operating Officer. Thank you.